The much predicted recession of 2023 still isn't here, and now the economists are becoming less confident it will come at all. As an example, Wells Fargo has dialed back its recession outlook. The firm now thinks a recession may not come in 2023. Instead, it will likely come at the beginning of 2024. Wells Fargo's team of economists just stated that while we still expect the delayed effects of monetary tightening and tighter credit availability to dampen economic growth, the economy has proven to be more resilient than we anticipated. Along with Wells Fargo, Goldman Sachs cut its odds of a recession this year from 35% down to 25%. Capital Economics put out a note stating it plans to push back its third quarter recession call, and Bank of America said there is an increasing path to a soft landing or a mild recession. Now, don't forget, we're on the brink of a commercial real estate meltdown. But of course, I'm not so sure of the definition of recession these days, as the trusty old government can change the definition on a whim. So perhaps we are already in a recession. Perhaps one is about to begin, or perhaps it simply has been delayed to a time more convenient for the government. I have no idea. So, please, wake me when someone finds out. So to help us understand what's going on, let's take a look at the volatility index. And this is the 2-year weekly. And as you can see in the upper left, the symbol is $VIX using stockcharts.com. Now, we watched definitely this move on up here, and it simply broke the trend going sideways and then down here. Most recently, it broke down in the last, say, 2 weeks below this level of around 16 to 18. But definitely that break is showing up in the ever-rising stock market indice, particularly the S&P 500. Now, the thing that I'm watching is that this breakdown, even back here, and certainly from this point here, the breakdown all the way down to this level was pretty sharp. But you don't see a corresponding sharp upturn in the stock market, again, particularly the S&P 500. So keep watching, because there may be some surprises. All right, let's now go take a look at the charts. And now we're looking at a 2-year weekly chart on the spiders, the SPY, and the close on Friday was 429.90. So drawing the channel lines, beginning here with the bottom channel line, moving up through like this, more or less, and then the top channel line moving up through more or less like that. So as you can see, this move from this bottom here on up to this point here, although we continue to move up, it's very weak comparison to the VIX. The VIX had a very hard, sharp drop, and we don't have a corresponding sharp move on the way up, at least in the S&P 500. It might be different for the NASDAQ. But I looked at the Dow, and I also looked at the Russell 2000, and those two charts are even worse looking than the S&P 500. So my point is, this is very lackadaisical, very lazy compared to the VIX. So there could be trouble once we get up to this point. I think we will get up to that top channel line there. We have exceeded this level here, and we are knocking on the door of this level here. So things do look good. I think things are going to continue on up, but only in a meandering style, not very strong. But let's take a look at the oscillators. Volume looks fine, nothing wrong with that. And then here in the MAC, you can see that this move off of the bottom, both the fast and slow lines moved on up, and we're actually getting some acceleration in the fast line at that point there. So it's accelerating, meaning it is getting stronger, and you can see that acceleration here in the histogram with this move down and then back on up. So we still have this downward trend line to deal with, but for the most part, it looks like we may move up and through that. So things are strengthening into the price rate of change, looks good. And then here into the RSI, we're at a relatively strong 74.55. So things are improving, as you can see in the last few months, but going all the way back to this level here, each time we get a low, it's a stair step up. So higher lows. Looks good, moving on up. Somewhat of a stealth bull market. Here, stochastics, we're getting toward the top now. This is not quite the early stages of a rollover, but I think we can start expecting to look or see some indications of that here within the next few weeks. So keep your eye out for that. As well, we can see here in the Williams has had a slight rollover, but that doesn't mean the entire oscillator is going to move on the way down. As you can see, going back to this area here, the Williams can stay up and do some sawtoothing for quite a while in these upper levels. So the same thing can happen up here. We just need to keep our eye out on that. And going back up here to the chart, again, I think the best advice that I could give is, if you're interested in buying, continue to average in. Don't spend all your money at once. Average in and just simply be prudent and patient. And for today, that's ChewDog Charts. Thank you.